And happy Friday, everybody. Uh, this is the trade log for the year for the Flex Trading Room. A couple of new positions we have on CAD yen, pound yen. We end up taking profit on the dollar CAD from carryover of 2023. New position on Euro New Zealand, pound Aussie, pound New Zealand. I want to check on the currency strength chart this morning. We have the euro down, dollar down, Swiss and pound at the bottom. We've got the New Zealand, the yen, and the Aussie and the CAD all sitting on top. The dollar just dropped around 825, 830 with some news. That would have been the US PPI data this morning. So just to recap for the week so far, we had US CPI data came in a little hotter than expected, 3.4% year over year. The previous print was 3.1, forecast was 3.2. And then we had PPI data this morning, came in a little bit softer. So the producer price index means that we're not paying as much for goods, which is kind of a good sign. Yet things are a little bit stickier, I'm assuming. So 3.4 CPI, this is not core. So this is excluding the food energy. Let's go to Trueflation for a moment and see if this is ticked up as well. So it's a slightly different reading. US inflation rate. I mean, it came right back down. So when we printed January 5th, this is running more real time, 2.2. This is coming all the way back down to the lows we saw back in June last year. All right, well, it's been trending lower. Market reaction for the week was pretty quiet. We actually had most of our move done Monday, Tuesday, Wednesday. I was able to grab some profit this week in one of my option strategies, Delta Trader. We grabbed profit on the Qs and the SPY. We got in for a strangle. Ended up walking away with $2.83 profit per contract. Nothing to scoff at for the first part of the year. We put in, I still have this trade out to next week. This is a strangle on the IWM or the Russell 2000. And then I put in a debit spread looking for a pretty amazing technical setup. I'll go to the chart right here. This is the DIA on the daily time frame. And we're trading pre-market on the DIA is down about $1. And I'm looking to see if we want to come back and tap this monthly pivot in the next few weeks. So this is a pretty good technical setup. I mean, again, the week I'm seeing overbought conditions. That's what all these connected dots are. Overbought conditions plus divergence. If I bring up my subgraphs, you can see that here. Let me zoom in. So looks something like this. Price has been, pushing to these highs. We have disagreement, and that's bearish divergence. So what I'm looking for on the chart, price action wise, to support this would be, can we come back and find any amount of pivot clusters or any type of Fibonacci retracement level? There's a low, there's a high. We have two monthly pivots right here. We have a new yearly pivot right here. We have 1, 2, 3, 4, 5, 6, 7 plus gaps, crazy amounts of pivots. All I'm really looking for is I don't expect price to do much other than maybe pull back to 23 to 30%. That's a reasonable correction. Let's get a percentage on that. How can it happen? I mean, the Fed can certainly say some stuff to talk the market down. They can kind of spoil the outlook of the markets thinking there's going to be 6 rate cuts this year, dropping the official cash rate for the Fed down to about 3.75, give or take, 3.5, 3.75. Percentage wise, if we pull back to, let's say, this 23% fib, that's about a 3% correction. That would be about a 4% correction. We find the 382, 5% correction. So we're not talking anything crazy. It's a 3 to 5% dip, a 3 to 5% pullback. If we get that, I think it's healthy. I think technically it's healthy. I'm actually pretty interested in still looking to buy dips on that to see if we get the runway. But again, press conference coming on the 31st, which is 2 weeks out. So we have 3 weeks out actually, 17th, 24th, and 31st. So the trade that I have running is, let's go back to equities on demand. I bought the 374 long put and I sold a 362 to reduce the cost. So initially, if I took that trade, I'm going out to the 9th of February. That gets me through the Fed rate decision on the 31st. out through that expiration on the 2nd, and then expiration let price move for that week through the 9th. So I paid 264. I've got about a $12 max credit, and I put in a limit credit for like $8 or $9, $8 I think. So anyway, good week overall. $2.83 net profit. That trade was done on Wednesday. Took it on Monday. No complaints. Had some pips, like I said, on the dollar CAD. Got some carryover trades. Swiss pairs looking pretty good. I'm still going to hold. I've generated 100, $570 of rollover in the last few months, just holding some Swiss crosses. And that is that. Let me jump into YouTube and say good morning to everybody. Let's get some hellos out there. Any problems joining the stream today? Any problems joining the live session? I did it through Restream as opposed to doing it through my streaming software. It still pushes the same way. I'm still pushing on YouTube, Facebook. I think this one I'm also pushing on LinkedIn and some other platforms as well. So, good morning, traders. Happy Friday. There we go. Morning, Chris. Good morning, Jan. Herschel. Good morning. Henny. Good morning, Don. Good morning, Trish. Good morning. Nice to see you. Hope you and Lloyd are doing well. David, good morning. Donna, thank you as always. Good stuff. All right. No problems joining. Good. Just want to make sure. So, because usually if I schedule the event, it pops up on my YouTube page and people could join through the Discord group. But hopefully the routine is already set where the schedule. By the way, that schedule is, I'll just type it right here. So on Mondays, Mondays, 9 a.m. Eastern time, Pulver report. On Wednesdays, 12 noon Eastern time, I'm doing a midweek market minute. Same thing, just going live. And then Fridays, 9 a.m. Eastern time, Pulver report. That's how you can catch me online. Okay. Rest of the week, Monday through Friday, equities on demand trading room, Tuesday, Wednesday, Thursday, flex trading room, trade alerts, signals, all that good stuff. And we're off to a good start for the year. Okay. All right. Let's go macro for a second. Let's go top down. And I actually have, let me find that here. Let's get fancy. Let's do top down style right there. And let's go bigger time frame and get rid of that now. So let's go SPY. Pre-market 476.40, right back up to the highs. Again, you can see the daily time frame. So every index for the US on the daily time frame is overbought with divergence. All of them. We had this crazy holiday rally, and I'm not saying that we can't stretch a little bit higher. Okay. What I am saying is that technically speaking, this is a great indicator, just like it was over here, right? We had a big run here, and that same indicator popped up for overbought conditions with divergence. So what do we see? We see a top put in from the FOMC, and down we go. Same type of thing could happen where CPI might be enough to put in a bit of a top, and the market fades a little bit for correction. I could see the market pulling back to this level here. This is the previous 2023 high in the SPY. So that would still be a potential buy point for me. I'm not necessarily calling the top. I could see the SPY kind of celebrating and melting up a little bit higher to check this high, but then start to fade off of that and just look to see if we get a single digit correction. Maybe it's a 3, 4, 5% correction. I think it's still healthy enough to buy on dips. We're coming into a healthy earnings season, and we're going to start looking at some earnings plays. I want to see some increased volatility in the next few weeks. Let me see what we have lined up on the calendar for StockTwits earnings. There we go. Let's go to next week. Will this get me to next week? So the 12th, 15th is Monday. Monday is Martin Luther King Day, so the markets are closed. I will still probably do a live session on Monday. I'll do a live session on Monday, even if it's just forex related, crypto related. That's fine. Then we have some notables here. 1, 2, 3. I've got 13 on Tuesday, 3 and 8. So let's just mark this up. So we have 13, 13 on Tuesday, and 11 on Wednesday, 25 on Thursday, and looks like 8. So still pretty quiet, and I'm hoping that's all of them. But I'll find out more on Sunday to get an exact number. But that's about what, 25, 36, 49. So there's over 50 companies reported earnings. I'm guessing that the meat of earnings is going to be that last part of January. So the 22nd through the 26th, probably a healthy earnings week. And then we go into the Fed meeting on the 31st. Okay. So just upcoming stuff. Trueflation, we're good on that. Data reads this week. CPI was the big one. Currency strength wise, not a ton has happened. We're still sticking with the macro theme here. So there's the SPY. Whoops. Get out of here. SPY. The Qs, again, daily time frame. There was my overbought condition. We had a little bit of a pullback on the Qs. Pre-market, we're right where we closed yesterday, and right back up towards the all-time highs. Volatility index-wise, we're still down to these lows. This is one trade that I'm contemplating for the year. Would be the VIXM, the VIXM. Possibly just buying some shares. It's a 5-month settled volatility instrument, so it's more medium term. You can't just own the shares of the VIX outright. So I think the VIXM wouldn't be a bad play. There was one other. Let me see if there was another. I had an article here for the VIX ETFs right here. So there were 3, I believe. So we've got the VXZ, we have the VIXM, and then the SVOL. This one I don't like. This one I'm not going to trade this one. I've traded the VIXM before. It's not something I want to sit and hold. It wouldn't be, I don't know, it wouldn't be terrible if I was looking at maybe taking a stab at owning some shares of the VIXM, but maybe holding it for 30 days. That's about it. So I'd still have to be somewhat relying on the timing. Probably just trade options around it, to be honest. If we go VIXM, it's actually at some fresh lows. So it doesn't look the same, right? The VIXM is at these fresh lows. It's repriced. You have, contango and backwardation and all these fancy things where it's just like this instrument just continually goes lower. But what I'm basing it on is the readings of the VIX. And yes, the market, maybe complacent enough or happy enough that we're not necessarily going to get this big spike. But I think at some point, throughout the year, let's say 4 times this year, something like once a quarter, we're just going to have a nice little spike up from, this instrument goes from, let's say 12 to 15 or 12 to 20. I mean, that doesn't seem like a lot, but if you went from $12 and change up to 20, that's a 50% spike. So again, it's the idea is you're hedging against your portfolio and just trying to make sure that there's protection to the downside in addition to stocks you own, obviously protect the downside, right? All right, let's go dollar index. 102.33. It's a little bit cleaner on this chart here. So dollar index, we found a nice support level here, this 100.88 level. This exact low was 100.61. I pointed this out, 101 to 100, major support on the dollar index. I still think in the interim, we'll find out more with the Fed in the next couple of weeks, but I think that this structure is still very strong and still well supported. We've got a nice little midpoint channel back here around 103.50. If we end up crossing above that, then the dollar gets a little bit stubbornly strong, similar to what we did last year after we put in that test around 100. So I'm looking at some interim dollar strength in the markets to sell off a little bit. Pretty strong correlation that we've seen. We're going to see the dollar get stronger. We'll typically see the stock markets fall. The Nikkei, this thing's been ripping like crazy. And for the week, it's already up like 4%. So we had a huge gap from last week's close to this week's current price. It's already up 6.62%. You zoom out, this is the highest it's been since the 90s. And we have that big Milestone high back in 1989. That's still a little bit higher. So the breakout looks pretty decent. Another 8.7% or so to get to the upside. I would just look for a bull flag. So here's the big rip on a daily time frame. It was like 3 or 4 straight days up. So it'd be kind of nice to see this where this previous resistance was broken. If we have this little sprout to the upside and a little hesitation, I'd look for a bull flag and just continue to climb until those all-time highs are reached. So the Japanese yen as a currency continues to stay weaker. It may not look like that today, but it's pretty jumbled. Not a ton of volatility on the axis, vertical axis. But I think that we have, the carry trade is in pretty much full effect unless the structure starts to break. I'm just thinking that currency traders are going to continue to be disappointed by waiting for the BOJ. So the carry trade's probably going to weaken the yen. The Nikkei is going to continue to rip. It's just a great carry trade right now. Okay. Anything else macro? We had 11 ETFs launched this week for Bitcoin, crypto. I can switch that up as well. So let's do. That's not what I wanted. There we go. Stocks, options, forex, crypto. Let's get into it. Bitcoin peaks here around 49,000. This is a Bitstamp feed. And I still would like to see a pullback based on my pivots and whatnot. I think a lot of the optimism for the ETFs have been priced in. We have some decent pullback levels. And like I said, I would love to see, this low, this high, pull back 50%. That'd be awesome if we pull back to around this area, 38,000. Yearly pivot sitting around 34,000 change. And it's sitting exactly at 34,531. So I would love to buy some more Bitcoin at that yearly pivot. I just don't know if I'm going to get that type of pullback. So I do think that overbought conditions with divergence will probably end up putting in some type of pattern in here and selling off, right? But from there, I'm looking to buy that dip. If we go sideways, let's say we go sideways here. If we go sideways, I'm still willing to buy a breakout and add. But it'd be add here and as well add here if we get a decent pullback. Right. Let's take a look at something. I mentioned this a few times this week in the trading rooms. Let's go Bitcoin mining costs. I just thought looking at this historically might give us some insight that cannot be happening. Somehow there's a spike that says that mining costs just jumped up to 200,000 in December. Let's zoom in a little bit. What I wanted to say was this. So the orange is the spot price of Bitcoin. And when the spot price gets a little bit ahead of itself, it tends to gravitate back towards mining costs. What's interesting right now is that we have mining costs in blue that are above the spot price. So I think there's two plays. One is the spot price catches up to those mining costs, or two, the mining costs, pull back because I don't know. I didn't see it this week. This is weird. I did not see that spike this week. That kind of throws the whole thing off. It looks very strange. See if I can zoom. It won't let me zoom out. Fudge. That's weird. Get something in here. That looks a little bit better. That's really strange. I didn't see that this week. So I don't know if that's a data glitch, but right now we've got mining costs showing 42,000 and 42,400 with the actual spot price at 46. Currently, the spot price around 45.7. So I just think it's something to watch. If we start to get a big separation between mining costs and price, typically they tend to gravitate and pull back. Okay. Could that be because it could be, but that showed a spike in December. So that spike was December 24th and 5th, which I don't know if that was really the case. And I looked at it this week and I didn't see that spike. I saw a spike up to like 60,000, but not, yeah, right here. I saw the spike up to 63,000, but I didn't see that spike to 211,000. So speaking of the approved ETFs, I think I have a list of those right here. So these are the approved ETFs. If you want to check out some of these feeds, so BlackRock, ARK, Wisdom Tree, Invesco, Bitwise, VanEck, Franklin, Fidelity. I am still in GBTC. I'm playing a minor MARA, and I'm trading a BITO, which is a ProShares ETF. So anyway, we'll see how much the market cap is. Let me see if the market cap has grown. So current market cap currently sitting 1.77 trillion, and market cap wise, if we zoom in, you can see it's been on a pretty steady uptrend. So from 2023 into now, it has been steady uptrend, steady inflows. We just missed that $3 trillion mark back in the highs of 2021, late 2021. But it's not really a surprise that you look at this market cap. Listen, this looks almost exactly like the Bitcoin chart, right? There's your, Bitcoin $60,000 high. There's your Bitcoin $68,000 high. There's your reset to $17,000. And here we are trading at, $45,000 to $46,000 with spikes up towards 48, 49. So I would like to see a pullback. I don't know if that's going to be in market cap necessarily, but if this just continues to go, these inflows maybe help the overall market cap in crypto, then I expect the spot prices to continue to go up. Okay. Let's see here. Any particular charts you'd like to take a look at? I'll go gold and silver as well. Gold. Oh, snap. Gold got a nice little jump this week off of the CPI data. So that's today's price on gold. Okay. Let me check on GLD. I put in a bear call spread on GLD that's trading at one. Ooh, we might get filled on this. Let me see what that trade was. So GLD put in a bear call spread 192 by 192.50. Okay, we're not there yet. So GLD pre-market 190.59. We're 6 minutes away from opening bell. Price has to come back up to these highs. Yeah, I was trying to get it up here. So if we come back and revisit the highs and looking to see if that resistance holds, and just taking a little, 50-cent spread bear call option trade. It's a credit spread. So if it fills, great. Looking at GLD versus XAU. I'm looking to see if this level fails. If it fails, gold comes back down. Great. If we're talking about gold in the next couple weeks up here, then I'm probably looking to get long. It might not be pretty. It might be like, I get faked out if we spike up here and close and then reverse back down. Maybe there's a fake out coming first, but I'll catch something. I'll increase. If I do a 1 contract trade and it loses, I'll do a 2 contract trade. I'll find direction on gold and I'll just increase my contract sizes so I can get profit. Whether it's this trade or this trade, I'm going to make some money on gold. I think this is going to be one of the bigger movers of the year. For something. I think we're going somewhere pretty large and in charge on gold. Whether it's a new breakout to fresh highs, and we're talking, $2,400. Measure this level here, project that level here. I think I already have this on the chart. Yep. So that's the breakout level right around 2475. And yeah, that'd be fantastic, right? I'd love to take that trade. So there's lots of money to be made if we find that direction. Same thing is true if we hit resistance and we pull back into this midpoint or pull back into range lows. There's direction. So let's see if we can maybe get through some of the mess and get through some of the noise with some confirmation, and then latch on a couple good trades. Dollar Swiss, okay, Henny, take a look at that. Dollar Swiss 85.08, daily time frame. I mean, for me, it's simple. I am long everything against the Swiss except for the yen. Swiss yen, I'm not trading. Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss. I'm long. I'm long on all of them. Okay. Why positive swap? My account right now is up $157.68 in positive swap since around September of last year. Not trading huge trade sizes. It's somewhere between, I don't know, portfolio builder trade size wise. I'm probably in for $3 or $4 total exposure. It's not a huge bunch of trades, but what I am looking for on this chart in particular is, let's go to a subgraph here, dollar Swiss. So this is a pretty simple trade, right? Technically, it's great. We have oversold conditions with divergence. We got a yearly pivot right here. We have a huge pocket right here. And if this trend line, and here's what makes it simple. If this trend line breaks, I'm long, right? Now that trend line, if I connect this high and this high, it still leaves price. I mean, look, price could come all the way back up here, tap the yearly pivot, and not break the trend line. So if you wanted to go a little tighter to price right there. But remember how price, there's a few ways that price can behave on the trend lines. We could go from this low, okay, and we can start going sideways and we can start breaking the trend line. We can go up from there. We can pull back one more time and have one more set in divergence and then put in a bullish pattern. That would be nice to put in a bullish pattern so we can then start trading this, plan for that swing, plan for that push into that yearly pivot. Let's say this happens. Let's say we just go sideways. Okay, we go sideways, we break this trend line. We're trading around 85. We've got a pivot right here just above 87. It's not a ton of direction, but I do think this is a high probability target for the year. So even if I bought it right now at 85.09 and it goes up to the yearly pivot, that's 200 pips I can plan on with positive carry. If it comes down a little bit lower, I would look for more divergence. I would take trade one, trade two. I'd still look at this thing to snap back and find that yearly pivot or give me a pattern to then give me a 3 to 5 wave move to the upside. I think this pocket gets filled. I think this high gets tested, and we have another yearly pivot way up here. Ideally, I'm looking to hold this dollar Swiss to 1.00. And I'm willing to say this, we're at 8,500 right now. I'm willing to ride this thing down to 8,000 to the downside and have about a 500 pip drawdown area for a trade that has a 1,500 pip upside. That's on one trade. So if I bought it right now, buy it, stop loss below 8,000, but I still have a 1,500 pip upside. That's a 3-to-1 reward to risk. I would take that trade over, on anything. Okay. But I'm not just going to take one trade and one stop loss. I mean, I'm building positions in here. I'm looking for bullish confirmation. So then when I get the direction correct, I can make a lot more profit. So I can add to my winners on that dollar Swiss. So we talked about this on Monday. If you're with me in the live session on Monday um, for the YouTube session at 9 a.m., I talked about all these pairs. I think Euro Swiss is probably one of my favorites. Oops, typed it in wrong. Euro Swiss, one of my favorites. And apparently there's no J in there. What the heck? There it is. Euro Swiss. So as my indicators print, I still have a yearly pivot sitting at 95.48. We don't quite, maybe we do. Do we have it? Okay, we got a decent bar count. So we are 200 bars away from the 200 exponential moving average. That's a notable number. The Aussie Swiss is a little bit further out. That's like 240 bars. Why didn't it load? I don't know, but there it is. This one is 240 bars. And again, yearly pivot up here. So again, easy summary for me. I like the yearly pivot on the Swiss. In fact, I posted that this week in my Telegram channel for Flex. These are the trades that I'm actively in right now. I'm establishing positions in all these trades. I did take a stab on pound Aussie and a stab on pound New Zealand. We took profit on the dollar CAD. Non-FX trades, I'm looking for, if we get bullish above 2,100 on gold, I'm long towards 24.75. If we reject off those highs at 21, I'm going to short it towards 1,900 or lower. Silver, we get a breakout above 26, we're going to 30. Copper, we get a break above 4. I think we can go to 6. Oil, strong support. Let me go to oil for a second. I didn't talk about that yet. Henny, you good on that for the dollar Swiss? Oil's up to 74.31. Okay. which means my USO trade is probably not going to fill, at least not yet. I'm trying to get this thing filled at like $60. So we may or may not get it. But I think we're range bound in oil. Trying to buy it low. And then yearly pivots is another message I had in these are all the yearly pivots I'm interested in. So there was a yearly pivot around 32.20 or so on the dollar CAD that was already tapped. All the other ones you can see here, they're all Swiss related. I like long to those yearly pivots. I think it's a good directional play. I think technically it sets up really solid on the daily, weekly, monthly, and it's going to take some time, obviously. But when you can have, I mean, even conservatively, that dollar Swiss is 200 pips away, right? If the Aussie Swiss is 200 pips away, I mean, everything but the Swiss yen. So you've got 6 currency pairs. And if it was an average of, 200 pips to the yearly pivot, okay, so I can make 1,200 pips pretty confidently in 2024. Just buying small, taking profit at the yearly pivot. But like I said, I'm not done there. I think there's a lot more to these trades. So I'm going to ride them out and take them to the Swiss crazy bin. Okay. All right, good stuff. Any other thoughts? Any other questions? Any other charts? So we're just getting underway for the week. Hope the schedule's starting to sink in. What we're gonna do for the Pulver report this year. Um, yeah, I just want to be around more, be more consistent. I also thought about adding a playlist to my YouTube channel, and I still have to do a video for Portfolio Builder. I'll get that out today. I still have to do another video for my YouTube session. The playlist is Trader's Path to 100%, and I thought about doing one, just another playlist, and just call it, strategy talk, something really simple where I can take, one of my systems, one of my strategies, one of my robots, just throw it out there. I mean, that playlist alone could probably have 25, 30 videos to it, from different ways that I trade. And it doesn't have to be one asset class. It could be, strategy talk for trading options, strategy talk for trading Forex, strategy talk for dollar cost averaging, strategy talk for buying stuff, like all sorts of stuff. So just more content, and hopefully it helps. Okay. All right. Let's see here. Anything else that I want to take a look at today? So I'm just gonna just do a quick overview of some of the directions. Aussie New Zealand, I think it's a good neutral position right now. I'm looking to see if we get a wedge breakout. I like the structure of this currency pair a lot, and it might be a messy way to get it going, but if and when we get a breakout here, lots of downside. If and when we get a breakout here, lots of upside. So this is a trade that I don't want to lose sight of. It's boring and not tradable right now, but eventually we're going to break 106 or we're going to break 109, and we're probably going to have 400 pips upside or downside. So that's another one that's on the radar. Pound Aussie, I'm looking to stay long. Pound New Zealand, I'm looking to stay long. We're getting some pullbacks today, but that's fine. I'm looking to stay long on both of these. The levels we took a stab at this current trade here. I'm gonna get in at the lows if they come back. So if this is high, low, lower high, lower low, lower high, lower low, I will be getting into something like this, falling wedge, and then rip this thing back up to the upside. So start a position for those. Okay. All right. So, what's a recap for this week? 11 ETFs launched for Bitcoin. Keep an eye on some of those price flows. Don't get crazy overextended. I've already got some exposure on Bitcoin through Coinbase, through a cold ledger, or a cold wallet, I mean, and also BITO, GBTC. I might take a stab at one of these other ones. I think Fidelity's decent. I think BlackRock's fine. So let me see the the price point on BlackRock. Is that right? IBIT? IBIT. Does this pop up? Yeah, right there. So let's see here. So we opened at 27, spiked up to 30. We're dropping back down to 26. I think what I'm going to look for is where price starts to settle and we start to establish some data points here on the charts. What is the overall price, if we're trading at 26.29 and the spot price of Bitcoin, let me write that down, 26.29, and Bitcoin is 45,000, 45,500. So 26.29 divided by 4,592. That's not right. 38 divided by 26.29. All right, my fat finger calculator skills are off. I'm looking to see like is it like 1/100th, 1/1000th? What's the kind of division if there plans to be like a spot price? Is it going to trail by something but stay somewhat consistent? The reason I say that is this is what I did on GBTC. The reason I traded GBTC is it was supposed to be 1/1000th of Bitcoin, and so I started to buy when it was not that, when it was actually less than that. That I thought it would catch up and make up for it, and it did. I mean, the GBTC move has been far superior to just the move on Bitcoin. So I mean, that run was 440% versus Bitcoin. I think was around 200%. So this low here to that high, yeah, right around 200%. So GBTC has doubled that performance. MicroStrategy with Michael Saylor and his diamond handing. You can see a huge pullback in MicroStrategy, but it outperformed. Right? I mean, that was up 430%. Now it's more vulnerable because we've had a huge snapback. So they're happening. I mean, we're gonna get some pullbacks. I think we'll get some pullbacks. Just be patient. Hopefully, a nice little healthy pullback. Find some pivot levels. Same thing is true on the stock market. I think technically, if I time it right, the next 2-3 weeks, hopefully the Dow will pull back and find a monthly pivot. Maybe the Fed has to talk it down a little bit and kind of show that, hey, the inflation reading we had was um, a little bit more alarming. That maybe they're not going to be as dovish and maybe not as aggressive cutting rate 6 times this year. Okay, Gary, good point. Doesn't appear to be options. That's another thing I want to keep a lookout for is these ETFs. I want to see, can we trade options around them? I do, and this is why I trade BITO. BITO, I do have options around. In fact, that was the entire reason I got into BITO. Started buying BITO around $14. Own the shares, have some credit spreads. I also have some long calls, and same thing. I'm happy. I think options are great because it's now a trade, right? ETFs, inflow, dollar cost averaging, but it's now a trade. So, and it's a lot easier for somebody that has a stock account to say, hey, here's a symbol that I can buy, and that gives me some type of spot. And look, they're all layered, right? So this is just a layered instrument on the price of Bitcoin. It's an ETF. So great. It's easier than, I mean, it's not like it's difficult to get a Coinbase wallet or get other stuff, but some people make it really complicated with what they do with their crypto and whatnot. But as they say, not your keys, not your cheese. So you can go to that extreme, or you can just be an investor, be a trader, and have some exposure. Keep it simple. Okay. All right. So I'll wrap it up here. Yeah, happy Friday. It's been a nice week back. Next week, Monday, the markets are closed, but I'll still do a live session at 9 a.m. We'll chat. We'll talk mostly Forex. We'll talk some crypto. Plan for the week. We'll look at the earnings calendar for Tuesday, Wednesday, Thursday, Friday. And yeah, have a great Friday. It's been a good trading week. Like I said, nice to be back, back in the routine. I like the workspace. And let's go. Happy 2024. Okay, if you do me a favor before you go, hit the thumbs up button for me, like and subscribe, all the good stuff. I'll push out some more videos. So when they go live, just make sure if you're subscribed to the YouTube channel, have the notification bell up so you can get those live alerts. If I post a video like my Trader's Path to 100%, I start the new playlist like a strategy talk that you get the videos. Check them out, and support and feedback is always appreciated. Okay. All right. Sounds good, everybody. Take care. Happy Friday, and I'll see y'all soon. Thanks. Bye.